I'm going to give you a tip right now for trading that's going to improve your success rate dramatically. I guarantee you that. And that is to stop chasing stocks higher when they go vertical and trying to short them when they drop vertically. And I'm going to give you guys a couple of examples just literally just from this week where I've seen people try to do this, and we've luckily helped them to stop doing this, and they end up actually making really nice money very quickly. So let me quickly show you that. But I think the broader idea here, before we even look at that, is to understand that if you're in the business of chasing stocks up or down, you're basically going with the herd. In fact, which is fine to do from a trending perspective, but what you're also doing, usually when people jump on these trends, it's usually way too late for a trade. So let me quickly show it. I mean, it's a beautiful sunny day here today. You can see people down at the cafe. Anyway, here we go. So what I noticed this week is that people got very, very bearish on semiconductor stocks. That's ticker symbol SMH is the ETF that represents this part of the market. Now the question you have to ask yourself is, given that this part of the market has just dropped about 18-19% from here to here over the past few weeks, is this really the part of the market that you need to go and short? Probably not. So one thing that I like to do is I like to use our market rover, which tells us exactly when a group of stock goes from bullish to bearish or bearish to bullish. So like right now, you can see that most things are short-term bearish. You can see that because, well, they're all short-term bearish. That's most sectors, right? And actually, most stocks are also bearish. But what we are noticing is that there still are stocks that are just starting to roll over. So for example, this particular stock here, AZO, AutoZone, you can see the sell signal that we got here, beautiful run, and we're just now getting another one. So the point is when you stop looking for things that have already fallen, see, the place to short a stock like this is here, not here, right? And now, this is a much better opportunity to maybe short a stock. You can see we got a sell signal here than is, again, trying to short semiconductors, which have just dropped 20% over the past few weeks. And so, a lot of this is really just it's mechanical in the sense that you have to ultimately look at the charts, but it's really mostly between your ears. And I always tell people the moment that they will find themselves getting profitable, consistently profitable, is also the moment when they can start consistently putting their emotions aside. Emotions are good for, for playing, if you're playing out in the yard or something, when you want to have fun. But when in trading and investing, there's really no room for emotions. And when I say emotions, it's really fear and greed. So just wanted to give you a bit of a heads up on this, and I hope this is helpful. This is really what our process is all about. It's what the Market Rover does, and it's helping so many people start to look at the market in a different way that I feel very much compelled to share this. And really, it's really become like a movement almost to make people understand what it takes to make money in the market and really trade with the wind at their back, with putting the odds in their favor by understanding, again, not chasing things higher or shorting things into a hole, but rather looking for things from a top-down perspective, looking at the market from a sector and group rotation perspective, and then picking the spots to buy or sell on the individual stock front or using options or whatever. So anyway, folks, I hope it's helpful. See you soon.